What's happening, guys? This is Victor with Alarma CPA. It's great to see you again. In today's video, guys, we're going to be talking about what are some of the new IRS 1099 rules that are going to affect every single small business in the US. But before we dive deep into it, let's just go ahead and take care of homework real quick. Let's just go ahead and help this channel grow. We are close to 280 plus subscribers. And we like to say thank you to you, and please go ahead and click like and subscribe so you keep helping this channel grow. My goal as a CPA, guys, is to share with you my experience, my knowledge, and professional opinion when it becomes about your business taxes, your personal taxes, as well as your personal finance. You always want to do your own research, right? You want to talk to your advisor, you want to talk to your professional, so you can come to the best conclusion when it becomes about your business taxes, personal taxes, and your personal finances. The IRS recently announced, guys, that now that payment platforms like PayPal, Venmo, Cash App, they now have to report every single transaction made to a small business in excess of $600. So check this out. If you're a small business owner and you're processing payments, right, and you're processing income, right, from your customers and your clients utilizing PayPal, Venmo, Cash App, which is a lot of small businesses here in the US. Now, those platforms are required to report to the IRS, if you received more than $600 worth of payments. Whereas before, it used to be $20,000 for these platforms, now it's $600. So now the IRS is pretty much it's trying to capture more information from the small business community. In today's video, I'm going to be helping you. I'm going to give you 3 tips that will help you to comply with this rule from the IRS. You always want to comply with the rules, right? But at the same time, you will not be overpaying taxes. In other words, you're going to be saving in taxes. So you ready to discuss that? So you ready to dive into it? Let's do it. 3, 2, 1. So guys, the new rule is pretty much targeting every small business. Every person that's doing a side hustle is targeting them, right? Think about this. The small business community is processing virtually most of their payments electronically, right? People are sending, crypto. People are sending electronic payments through like Zelle. People are using Cash App. People are using Venmo. People are using PayPal, right? More and more transactions are being made electronically. And the IRS believes that they're not capturing enough taxes from these platforms. So now they've changed the game. Now they are like, okay, now the limit is not, or the minimum is not $20,000. Now the minimum is $600. So virtually every single small business that takes payments over one of these electronic platforms, that income is going to be reported to the IRS via a Form 1099-K. And in today's video, we're going to be talking about 3 ways, as I said before, 3 ways that are going to help you comply with the tax law, but at the same time, it's going to help you save money on your taxes. Number 1, if you're processing payments from any of these platforms like PayPal, Cash App, Zelle, any of these platforms, you want to make sure that you're separating your accounts from your business account and your personal account. So you want to make sure that you set up an LLC. Hopefully you've set up an LLC already, and you're processing your payments, your business payments through the LLC account. And then you're processing your personal payments in your separate personal account. That way, there's no commingling amongst your personal matters and your business matters. That's the first thing. Number 2, you want to make sure that on your business transactions, right, you want to make sure that you're tracking every single expense, every single deduction, every item that needs to, every single item that you're covering for your customer or your client, you want to make sure you're tracking it. Let's say, for example, if you are a contractor and you're buying materials on behalf of your customer, you want to make sure that you're keeping track of these expenses on your customer's behalf, because these amounts are going to be deducted from the gross amount. On point number 2 is that you want to make sure that in your business, you're keeping track of every single business expense and deduction. Why? Because you want to make sure that you're reporting your net amount for taxes, not your gross amount. Remember, you're gonna be taxed on the net amount. You're not gonna be taxed on the gross amount. You're gonna make the mistake that if you don't keep track of your expenses correctly, you're gonna be overpaying taxes because you're gonna be taxed on the gross amount instead of the net amount. And point number 3, you wanna make sure that you're not double taxed. You're saying, well, Victor, like, what do you mean not being double taxed? Well, think about this, guys. Okay, let's say that your customer, you provide service to your customer or your client. And at the beginning of the year, you fill out a form W-9 for your customer or your client. Client is gonna take that information, which is your business name, business address, tax ID, and it's going to report that information along with the payment amount to the IRS, right? So your customers is reporting that through a 1099 to the IRS. That's the customer. Now, the payment platform is required to file a Form 1099-K, and the payment platform is going to report to the IRS the total amount of payments that were processed for your business. Now check this out. Your customer sent a 1099 to the IRS, and now the payment platform is sending another 1099. So your customer is sending a 1099 NEC, and the payment platform is sending a 1099-K. That's where the double taxation could come. And you want to make sure that when you file your taxes, you are not doubling your income either. Okay, you want to make sure that your CPA or your accountant is adjusting the correct amount for income purposes for your tax returns. In conclusion, there's always one way, guys, for you to make sure that you are compliant with the tax law, but at the same time, you're saving money on taxes. As always, talk to your advisor, talk to your CPA, talk to your accountant, do your own research, and make sure that you're collecting enough information in order for you to make an informed decision. That way you are in a better position. And as always, thank you so much for liking and subscribing. And guess what? We'll see you in the next one.